Hey everyone, welcome back to Next Vault. Today we're looking at Supermicro, SMCI, a name that's been making waves in server infrastructure, AI hardware, and edge computing. With the chip boom and rising demand for data centers, SMCI has strong tailwinds. But between supply chain risks, valuation concerns, and intense competition, the road ahead isn't all smooth. Let's unpack what's happening, what drivers can move SMCI in 2025, and whether it's a buy, hold, or pass. What Supermicro does and its market position. Supermicro designs, develops, and manufactures high-performance server and storage solutions, including server motherboards, chassis, blade systems, and high-density computing platforms. Recent years have brought strong demand for AI training rigs, cloud infrastructure, edge computing, and high-performance computing, HPC, for scientific and enterprise workloads. SMCI is part of that broader shift. Recent financials and stock performance. As of the latest data, SMCI is trading around US $45 per share. Need to examine recent revenue growth. Supermicro has seen strong annual growth rates, especially in its AI accelerator server segments. But with that, costs and supply chain pressures have increased. Margins are under pressure due to component shortages, procurement issues, and tariff headwind risks, especially for components sourced internationally. Stock performance. SMCI has enjoyed strong runs during periods of AI hype, but is also vulnerable to broader macroeconomic headwinds, interest rate hikes, inflation, and semiconductor cycle slowdowns. Key strengths and catalysts: AI and machine learning. Demand. SMCI is benefiting from large AI model training, HPC workloads, and cloud providers needing more GPUs and high-density infrastructure. Edge computing and 5G. With more processing being pushed out to the edge, IoT, real-time analytics, etc., there's demand for flexible server infrastructure, something SMCI is well positioned for. Customization and turnkey solutions. Customers often prefer assembled systems rather than assembling parts themselves. SMCI's ability to deliver high-quality systems is a competitive advantage. Component partnerships and supply chain. Where SMCI can secure rare chips, accelerators, and manage supply bottlenecks well, that will be a strength. Risks and headwinds valuation. Risk. With high growth expectations baked in, any miss on revenue, margin, or delivery can lead to sharp downside. Investors often value SMCI at premium multiples compared to more stable hardware firms. Competition. Giants like Dell, HPE, Lenovo, and even in-house cloud providers, AWS, Microsoft Azure, Google Cloud, can build custom infrastructure. Also, new GPU accelerator vendors may challenge upstream supply. Supply chain and tariffs. Dependence on advanced chips, accelerators, and global logistics means exposure to geopolitical risk, trade restrictions, and manufacturing capacity constraints. Macro and inflationary pressure. Rising interest rates and inflation increase costs, both in raw materials and operations. Also, slower CapEx cycles in cloud or enterprise customers could reduce demand. Analyst sentiment and valuation metrics. Analysts are mixed. Some bullish views see SMCI as one of the few to truly benefit from the AI infrastructure build-out. Others warn that SMCI's margins will likely compress, and competition will eat into its market share. Key metrics to watch: revenue growth in the AI server segment, gross margins, operating leverage, order backlog, and how well SMCI manages expenses. Pay attention to guidance. What SMCI expects in terms of bookings, shipments, lead times, and how they plan to invest in R&D and infrastructure to stay ahead. Outlook and verdict. If you're considering SMCI, buy, hold. If you believe the AI, HPC, and edge computing demand continues accelerating, and SMCI can maintain gross margin discipline despite cost pressures. Wait. Be cautious if you're sensitive to valuation risk, supply chain breakdowns, or macroeconomic uncertainty. A small miss could result in a large downside. Long-term, Supermicro looks well-placed in the AI infrastructure cycle, but it's not risk-free. For now, this may be a speculative tech infrastructure play. High potential, high volatility. Let me know your take. Are you bullish on SMCI's infrastructure path, or are you waiting for a pullback or better entry? Hit like if you found this useful, subscribe for more tech investment analysis, and I'll see you in the next one.